Hey guys, although the markets have had some setbacks recently, the stocks have already been running up quite high. This V-shaped recovery is taking some form and valuations are getting more and more rich. So this means we now need to search harder for undervalued stocks and possibly have a much more long-term perspective. So in today's video, I want to talk about a new stock that I'm picking and discuss its potential as well as the risk associated with it. And the stock that I'm picking is Huami, ticker symbol HMI, and I'm hoping that it could be a good investment in both the short term as well as always in the long term, because I'm usually investing in the long term and looking for about 10x in my investment. So if you are a patron of my channel, you already know that I have taken a position because I'm sending out some information beforehand before I make some videos. It always takes me some time to create the videos, do the research and so on. But already my last video about investing in Baidu stock, I outlined that I'm looking to invest in the healthcare system in general, because although it's not as sexy as the EV revolution currently, I do think it has lots of merit, and even now with this Roni situation, it's just been boosted by this in this regard. So there should be lots of growth ahead, and it's a big long-term trend merging with lots of other trends in the area of artificial intelligence, big data and so on. Also with gene editing, I made some investments in this area, genomic sequencing, gene editing, but these are all not Chinese stocks. It is really hard to identify Chinese stocks in this regard that are investable for foreign investors, which is a shame, but I'm glad that I now found one. So before we dive into it, please hit the like button to support this video, and also subscribe to the channel if you're new to it. And then let's take a look at Huami. So I do think the Chinese healthcare market is super interesting, and last year I've been giving a talk at the Suzhou Medical Week about why China will disrupt digital health, and I've also been part of a panel with, for instance, the chief health officer of IBM China, as well as some venture capital investors and Accenture consultants. And well, my pitch was that we have to just look at the macro picture regarding health. For instance, just look at how big China's widespread diseases such as diabetes and cancer have gotten, and with China becoming more and more wealthy, of course, also these diseases are getting more and more severe. And as always, if there's a big problem, this means it can be lucrative for businesses to solve it. So one company in this area that I've identified is Huami, and I hope an investment in their stock could be a good opportunity to participate in the Chinese healthcare market. So if we have a look at the segmentation of the different players in the Chinese healthcare market, I'm hoping that Huami could sit at the intersection between a self-care hardware setup and with the data in the backend, also a company that thrives through AI and big data analysis interlinking with other players. So Huami is, of course, in the first place a manufacturer of smart healthcare devices. For instance, I've ordered some watches now in order to do a little bit of a due diligence, check on their quality, try it myself, see what is the price range and how does it fit to what I personally would use. And most of their products are sold under the brand Amazfit, and others are actually produced for Xiaomi. And Xiaomi, they have a really deep relationship with Huami, as we will see. So if we take a look at the market, Huami as a standalone brand is still a small player, but gaining market share and is growing. So together with Xiaomi, they are already much bigger and growing fast. And in the future, they may challenge even Fitbit or Apple, well, at least in China. Because you need to be aware that anything that is about data collection and tracking in China will always benefit from being a homebrew company, and also due to the price point of their products, I think they should be able to penetrate the mass markets much quicker. And whether or not they can succeed against the Google-backed Fitbit, well, that's still another big question. But yeah, in China, they should probably be doing well. Now, what is really interesting and struck my interest here about Huami is that their market cap is only currently at 831 million US dollars, so it's a small cap, and it's only traded at 1 times their 2019 sales, which is incredibly if you think about it. Furthermore, it's a highly growing company with 50% and more year-on-year growth rates, and while it is being profitable, and it's really rare to find a company that is growing as fast and is profitable at the same time. Also, they have 360 million US dollars in cash, which is 40% of their valuation. So this is, once again, this is really incredible. So now there are some red flags as well. So I can only make guesses about why their valuation is currently so low. So, well, for one, the product isn't particularly sexy. It's looking like a cheap Apple knockoff, and I don't like that. Actually, I think a company should always be unique, have their own ideas, their own products. Ideally, it shouldn't be just selling the same thing as others are doing. Ideally, they have something which is really unique to them and differentiating to what is in the market already. Second, their relationship to Xiaomi is an asset, but as well as troublesome in some regards. So Huami's biggest challenge will be to make their brand independent from Xiaomi and make Amazfit stand out in the markets. Currently, they are still selling most products entirely through Xiaomi, and they are having a revenue split model. So 70% of their total sales are coming from Xiaomi, from this partnership. And although it helps them to capture a large market successfully and quickly, it also helps them to lower their sales expense ratio. But it doesn't make them unique and it doesn't make them stand out. So it really means that they are very dependent on Xiaomi. And what could happen if Xiaomi actually cuts the ties and, well, if the partnership breaks up? And there really is reason to believe so, because this is a really big red flag here that it was reported that Xiaomi investors have just decreased their registered capital investment in Huami and they're walking away. So I couldn't find more deeper information on that. There is nothing from Huami investor relations on that regard, but maybe this uncertainty is part of the reason why investors are trading Huami with a certain discount right now. However, in general, I do think that Huami is becoming an interesting investor story here. As I am aiming for the long term here and I'm much more interested in their AI and big data business, this could still become something really interesting. So for instance, they're having more than 56 million registered users and they continuously monitor them. They provide a human biometric data 24/7, including heart rate, electrocardiography, weight, body and fat composition, GPS, running, steps, sleeping, and so on. So applications and use cases are ranging from children's social interaction and security to, well, using public transportation, payments, secure door access, and even, controlling smart home appliances and using AI speech assistants attached to your body, essentially. So as you can see, those smart wearables can deliver many user value propositions, including but not limited to health, sports, mobile payment, IoT, and kind of cloud control and smart home services and AI assistance here. What I also like about it is that it's a founder-run business, and also the CEO in his open letter here stresses the fact that they like to become actually a healthcare platform. So I do see much more value in this vision and rather than selling just smart devices and hardware. And this is actually my investment proposition here. This is my assumption that they will move more in this direction, and I'm taking this bet with Huami. And if they're starting to make use of their data, I believe they would be able to switch from just a hardware manufacturer to a more tech-oriented company, and that could actually lead to much higher valuations, I believe. So currently with their low valuation and this high growth, I actually do think it's really undervalued already and could be a good short-term investment. However, at the same time, it's nowhere near close to a Tesla or NIO story, who are both tackling trillion-dollar business markets and have a clear growth trajectory here and have room to grow with billions of revenue. Huami is, of course, much smaller, and particularly when it comes to the hardware business here. So I wouldn't say it's one of those typical 10x investments that I'm taking. However, with this little intrinsic value here, that it could actually make a turn in the investor story and hopefully grow in this long-term vision of becoming a healthcare platform, I do think it's interesting to take a step into Huami here. And I'm also already seeing the first steps here. So for instance, they are seemingly withdrawing from Xiaomi. So they have also already hired a guy from the US with years of experience in the healthcare market to manage their investors' relations stories. So it really seems to me that Huami is actually quite progressive on this and wants to shape their business story. They just had a fireside chat with the CEO as well. And yeah, I think we should watch closely if it's just marketing buzz here or if their approach is actually valid and they can, yeah, really go into this healthcare platform business. So right now I'm just trying to read between the lines here of what I'm seeing, and yeah, they definitely grasp my interest, and I will now test their products and continue to listen to their investor relations, which can be painful, as you can see.
Epidemiologist and an academician of Chinese Academy of Engineering.
But well, for you guys, I'm happy to do it if you want it. So hit the like button if you want me to continue reporting on them. So how to invest in them? Well, currently it is trading below its all-time highs, and it may definitely come back down further in case the China issues still intensify and in the case that markets in generally go down, which is, well, the markets are likely for a setback, so it's possible. However, for me, frankly, it's all buy territory right now, and that doesn't mean it should be buy territory for you. As always, you need to come up with your own decision. You shouldn't be trading according to what I'm doing. I'm just sharing my personal story here and how I'm thinking about some markets and the stocks that I'm seeing. So do your own due diligence, and as always, I'm also now just taking a small position and to see where it is going. Don't shoot all of your powder with the first shot. Take some time, go in step by step, have a nice cost average, and that way you should really be doing fine over time if the stock is gradually improving. So what do you think about the company? Have you been using their products? Do you think it's a good stock investment? What do you think about the healthcare market in general and the big data behind it? Let me know down in the comments. Once again, please smash the like button and see you in the next video. And yeah, if you want such stock picks early, once again, you can become a patron of our channel. We would really appreciate that. And yeah, otherwise, have a good start in the next week, and yeah, see you in the next video.